Hey traders, okay, so in this video I want to give you some information in regards to trading with the Fibonacci Retracement tool, and in addition to that another strategy which I would call the 61.8 strategy. And basically what that is taking advantage of one of the ratios within the two extreme distances within the Fibonacci tool, and you're looking for retracements off the 61.8 line. Okay, so when we're talking about Fibonacci retracement, basically what this is it calculates ratios for us between a high resistance point and a low support point. So in this regard, for example, Euro JPY on a 15-minute chart, we would consider this, the top of the wick of this candle here, to be the high resistance point, and the bottom of the wick of this green candle here to be the low support point. And so what we want to do is utilizing this push button here, okay, hold down to wherever you'd like the 100% line to be. In this case, what we're doing is we're saying the market was at the high here, it pulled back down, and then it's going to retrace back up, and we want to look to see what the candles are going to do in relation to those retracement ratios that are going to be in between here. So if we're going to be doing the pullback here, we want this to be a 100% line and this to be a 0 line. So what you do is you hold your cursor at the top of the wick of this green candle, and then hold it down and then drag it all the way down to the bottom until you see the 0% line at the bottom of the wick of this candle here, and then you release. Okay, so what the tool has actually done is it's created these additional lines in between for us, and basically what it's saying is that the distance between here and here, this line here is 23.6% of the distance between here and here. This one is 38.2. This is the 50% mark between here and here, and this is the 61.8. Now, from experience, what I find is that the greater number of retracements tend to happen at the 61.8 line, and hence what I'm going to call the 61.8 strategy is once the market has actually reached to these points here, that is going to bounce off this line here. There's two things that I can do. One is when price does break past this line, I tend to possibly look for an opportunity to take a reversal off of that. In most cases, it's to say if I've got more than 5 minutes on the clock for this candle, if price is somewhere up here, I'm going to look for other confluence points where I can say, well, hey, this is an addition confirmation for me to say that the market is going to bounce back either on this candle. So any point above the 61.8 line, and I'd consider doing a reversal off that. So that would be a put on that for the remaining remaining duration of that 15-minute candle, or I would actually consider taking a reversal trade off the next candle. Okay, and the confluence points could be your EMA 50, it could be the EMA 200. For those of you that have your Bollinger Bands up, it could be the upper or the lower Bollinger Band, it could be the middle Bollinger Band, it could be these dynamic trend lines. Anything for that matter that might give you an indication that the market is going to retrace back, or certainly the next candle that would open that bounces off of this. You have two options to secure your trade. The first one is where you can just jump straight into the candle or the trade on the open of this candle, or the second option is to wait for a pullback. So if the market does pull back, it's a green candle briefly, you can take a trade here and do a put, so you'd probably be a little bit more comfortable. How often does that retracement happen in terms of this little pullback here? Not too often. However, those are the little things that you might want to pay attention to in order to ensure that your trade is a lot more secure. In using the Fib tool, it's basically creating for you now a more familiar point that you can trade off of. So if you remember 2 videos ago where I said trade that which is familiar, well, you can utilize this now to trade that which is familiar. Okay? So once again, this is the Fib tool. This is creating ratios for us. Wherever you hold this down initially is the 100% mark. Pull it all the way back down to wherever you want the 0% mark to be. Now, where else you can utilize this is, say for instance, you found a double top, a triple top, or a double bottom and a triple bottom. Okay, let's use this one here. Actually, let me just have a quick look to see if I've got something. Okay, here we've got a double bottom here. Excuse me. Remember in past videos when I was talking about the fact that when you actually see 2 points and those 2 points are connected by either the double bottom and double top, and then there's a retracement happen, right? What you can do, and in those instances when I talk about, well, if there's a distance move between here and here, the market's going to retrace back at least, say, 50%. To that, you can also then apply, say, for instance, with the euro pairs, if the market moves 70 pips or so, yes, there's possibly going to be a retracement of about 50%. If pound pairs move, say, 100 pips or so, then again, most likely a retracement of about 50 pips or so will happen. So in this case, what we can do is you take the Fib tool, and we're assuming none of this has actually happened. We're just saying the market has actually moved up, and you're probably at this candle here, and you're saying, okay, market's going to retrace back. How far will it go? So what we're doing is we're going to utilize this in this case to be our the 100% mark. Okay, because we want the 61.8 or the 50 to be down here somewhere. So we're going to utilize this to be a 100% mark, which is the furthest support line that we presently have, and this one up here to be our 0% mark, and that is going to be the furthest resistance point that we presently have to work with, right? Now, the first thing we do, we have a quick look to see where our 23.6 is, where our 38.2 is. Here's our 50% mark here, between here and here, and this is our 61.8. Now, have a quick look to see where the market actually pushed down till. Notice how on the 50% mark here, there was a bit of a reversal. We've got a tiny green candle here. In this case, the market kept pushing back down, but straight after the 61.8, market pushed back up again. Right? Usually after your double bottoms and your double tops, market's never going to come back down to this point again, unless the market maker has discovered that there's a lot of money stuck down here and they want to spike the market down and do another stop hunt. It's never going to happen. So what you most likely will find is that the market goes up, retraces back at least 50% or about 61.8%, and then we'll bounce back up again. And then notice how once we've drawn this in, look at how the market, and this is something you guys can trade. I'm calling this the 61.8 strategy. So you can actually trade this. If market penetrates, hits, comes near, you can take a trade in on the next candle off of this. Now, I haven't actually calculated percentages of how successful this is. However, it's pretty much in the money 8 out of 10 times, and you can actually make it 100% again by adding other confluence factors to that. That will give you the confirmation that this is what it is. For example, like, double bottom, market's going to retrace, but it's not going to go all the way up. Notice how here, when at the end of the London session and going into the New York session, where the market pushed back up and then came back down and created a whole heap of wicks around the 50% mark, right? You can trade these wicks, guys, and this EMA 50 here, this would be another point where you can say, okay, market's pushing down here, we can probably look at doing a reversal trade off that. Okay, so again, we're looking for, in binary terms, we're looking for those areas where things become familiar. So you can actually trade these. Look for opportunities here. Once you've drawn in, mind you, you wouldn't have known this because your tool would not have been drawn until market reached up here, certainly. However, when you see these drawn in, you start to notice that the market does bounce off particular points. Going into here, though, the market these tools were drawn in. Notice how the market actually responds to them. How the market is bouncing off the 23.8. The 23.2 line. The 38.2 line. Market bounces off there and then continues going up. So if you're actually doing trend follow trades, watch to see how the market behaves around this. Now, if you look at the 23.6 and the 38.2 line, notice how consolidation happened in between that. These fib tools can actually give you a lot in the way of knowing what the market predictions might be. Now, if we go all the way back here to the London session and the previous day, well, this is what it's telling me. One, double bottom, market is going to climb in at least 2 bursts. Okay, so market goes up, we have a 61.8 retracement, market pushes back all the way up to the 23.6, comes back down, consolidates entirely into the first half of the Asian session. Remember what I said earlier, market's not going to push back down immediately after the double top. Well, so what we're expecting is a break up again. So where you could take the potential trade is whenever the market breaks past this 23.6, if that's where it's contained. And then you can look for opportunities. Okay, it's broken past, it's going. You might want to wait for the conclusion of this trade before you look at possible entries. And the whole point behind it is so it doesn't end up being like this, where you take a trade in somewhere here, and then the market pulls back on you and finishes in the red, and you end up losing. So you'd want a confirmation candle that the market has broken past. In this case here, this is something I've noticed. Couple of things. One, this was the actual high of the New York session previously, and two, this broke through two lines. When it goes past at least your 0 point line or your 100% line, you're possibly going to end up with something like this. Okay, so that's another familial point where you might consider a possible trade. Okay, so look for those when the market does break past the 0 or the 100-point line. But for all intents and purposes, I'd like for you to have a clear look at what the market does around the 50% line, but more so especially at the 61.8. So if the market does break down past the 50% line and then comes down to the 61.8, your chances of a very successful trade here is about 90% plus. Okay, so certainly look into taking those trades. And in the most simplest terms, certainly apply this to the high and low of whatever session you're looking at trading. You can at times also do this, say for instance, from the low of the Asian session to possibly the high of the London session, especially if you're expecting that during the open of the New York session the market's going to do a false move back. It's going to pull back slightly before it climbs up, so you can actually apply that. So let's do it in this case. We're going to utilize the low of the New York session as a 100% point, and then this is officially the high of the London session. Okay, and notice how the market does pull back and pulls back to the 23.6 line before it climbs, comes back down, hits it again. Now, if you find that there's multiple hits to these lines and it's not breaking it, chances are the trend will just continue going up. So that's an additional confirmation for those of you that are enacting particular strategies of where the market direction may flow through to. This is where we start paying attention to the higher lows, for example. So in this case, this is a higher low than this one. These are higher lows than this one. This is a higher low than this one. It's giving you some indication as to where the market is heading. All right, so apply that knowledge to it as well. In this case, let's try it here as well. This is going to be our 100% line, and this is going to be our 0% line. Draw that in. Okay, notice how market pushed up to the 61.8, and this bounces back here. Once again, you could have possibly taken the trade here when the market pushed up above it, and you've done a put for 15 minutes. That would put you in a safer area. Okay, and I should mention again, the number of times where the market actually gives you that wick up the top, it's quite low. So unless you kind of want to take very, very strict trades there, you might want to consider taking it on the open. So you chances are you could probably win about 8 or 9 out of 10. using this strategy. Okay, and just going back to the tool itself, draw it on the top and bottom of the wicks. Some people, I have seen videos where they use the bodies. I don't understand that. They probably do have their own reasons, but certainly utilize that on the top and the bottom of the wicks. Okay, if I've missed anything, please drop a comment on under the video, and we'll look into it. There's something else that I wanted to mention just quickly. You guys might have seen that I've put up a video about a broker that I've just approved in Britain. Now, one of the key things that I liked about these guys are that they've got a very high sell percentage off their trades. What I want you guys to, for those of you that have signed up for them, what I want you to play around with is with the Fibonacci tools, right? Say, for instance, you've got, what was the double here? Say, for instance, you've got your double tops or your double bottoms. In this case, you say for instance, you take a trade, a retracement trade of, in this case here, your 50% mark, and you're saying, I'm going to take a trade pushing up for an hour, maybe. All right. Say, for instance, for the first 15 minutes, you're heavily in the money, and you're kind of concerned that the market hasn't broken past these higher highs at this stage, and you think, well, what if the market is going to pull back and I'm going to lose this trade because I still have 45 minutes or so within this expiry? Do I risk it? Don't I risk it? If you've got a sell rate on there where the broker is offering you, say, 130, 140%, and you want to lock in your profits, you can utilize the Fibonacci tools just to take bounces, and this is what you can do in Nadex as well. Take the actual bounces, maybe do a 2-hour binary on Nadex or on the ETX site, and bank in those 30-40% above, you know, the actual investment that you have. There was an example that I saw here, which is what. Okay, here in this case, say for instance you draw in your Fib tool here. We use this at the 100% line, and we utilize this as our 0% line. Say for instance on this candle here, where you see the market come down, hit past the 0% line, but then go back up and cross here. What I'm thinking is that the market is going to continue up now, right? And at this point, I take an hourly long binary trade. Up here, I'm very confident that this is going to be in the money. Maybe after this candle where this pushes back down again, and especially when this is lower than this one here, I might start worrying. If I have taken the trade here, and my broker is offering me a sell, say 130%, and I don't want to actually end up out of the money, what I can do is sell that and still be in the money, and not. And if I would have left it open, and with most of the European brokers, what will happen is if you leave that trade open, they won't offer you much on the sell rate, and when you drop all the way down here, you've actually lost that trade. Okay, so for those of you that have signed up with ETX, try using this strategy as well. Those of you that are trading Nadex, or all of my US buddies, look at applying the Fibonacci retracement to your trades that you're going to be doing on Nadex. Okay, this is one way that I trade off there as well. So certainly just do that. Wait for bounces off there. Look for confirmation of these lines here: 0-point line, the 100% line, the 50 and the 61.8. If the market is bouncing, you've got a great sell rate, and you think there's going to be another retracement back down below your entry point, take the sell, lock in your profits, and then go find another opportunity. Okay? All the best, guys.